Well, hello, welcome everybody to this QuickBooks House for Houses of Worship, Understanding Pastors Payroll. On behalf of TechSoup, I want to welcome you. I'm Aretha Simons, a webinar producer here. I know a lot of you have been on our webinar. I see a lot of familiar names, but if this is your first time, let's show you how you can engage today. He already said type in the chat room. Normally we say the Q&A, but you can use both. But I know they have lots of team members behind the scenes. They can grab your questions from the chat. But this is going to be recorded. That's the most important part. You're going to get the video replay and the slides within 48 hours, probably tomorrow. Somebody's already turned on that closed caption button. So if you need the closed caption, just tap on the CC button at the bottom of your screen for the closed caption. I'm going to get ready to turn this over. But before I do, I want to say again, welcome on behalf of TechSoup. We are a global partner providing digital solutions and services for good. And one of our partners that help us do that is the QuickBooks trainer, Gregg Bossen, and Barbara Starley. They're here, our presenters today. So I'm going to go ahead and turn this over to Gregg. Have a great webinar, everybody.
All right. Okay. Aretha, is that picture that are all those people your employees?
Not mine, but
well, no. But that was a lot of people. That was a lot of people.
Oh yeah, we remember we're global, so we're everywhere.
All right. Okay. All right, guys. Thank you so much. There's just a couple of things that I just wanted to cover real quick. Welcome to QuickBooks for Houses of Worship, Understanding Pastor Payroll. And this is put on by both Barbara and myself with QuickBooks Made Easy for Nonprofits. So how many of you have seen either me or Barbara teach before? Put it in the chat. Give me a yes or a no. I just want to see who's seen us teach before. All right. So, oh, wow, we got a lot of people that have. More people have than haven't, which I think is a real, I think that's a real compliment that you would actually listen to us babble on. So as you know, most of you already know, I have a company called QuickBooks Made Easy for Nonprofits. All right. And so all we do is we teach nonprofits. I'm a CPA. Barbara's a CPA. All we do is teach nonprofits how to use QuickBooks. But Barbara in particular focuses on houses of worship. And I'm going to tell you, obviously, we're going to be talking about Pastor Payroll today, but if you are using QuickBooks and you are a house of worship and you have funds that are designated and you're trying to figure out what the balances are without messing up your budget to actual, and it's messy. Accounting for houses of worship is very unusual. And Barbara is a specialist at this. This is what her calling is. And I wanted just to tell you that coming up in, so this is next month, September 20th and the 21st, we have a 2-day, it's 2.5 hours a day for 2 days, webinar just for how to use QuickBooks if you are a house of worship. We're going to do it for desktop users on September the 20th and the 21st. We're going to do it again for online users on the 27th and the 28th the following week. All right. So, and by the way, put in the chat, do you use QuickBooks Online, QuickBooks Desktop, or something else? Just put it in the chat. I'm just kind of curious. You'll find more and more people are moving to QuickBooks Online, but it looks like more people are actually in the online edition as opposed to the desktop. But that's why we do the class twice. But anyway, so, and I think we have a little discount for you for coming to this live session. But anyway, let's move on. I want to just kind of formally introduce Barbara. So Barbara is a CPA, and Barbara, I met her at a national conference. Both me and Barbara teach at national conferences around the country, and the big one is called QuickBooks Connect, and it's a session that is just for people that are interested in QuickBooks or apps that connect with QuickBooks and stuff like that. There's thousands of people that go, and she taught a session a couple of years ago just on setting up books for a house of worship. And I walked up to her afterwards and I said, me and you got to talk, because she has a really cool way of setting things up so you can track your funds. But today we're going to talk about about Pastor Payroll, which nobody seems to understand, but Barbara does. So I'm going to turn it over to you, Barbara. I'll stop my share. If you have any questions, please don't put them in the Q&A. Please put them in the chat. and then I will try desperately to not interrupt you. It's a horrible thing that I do. And Barbara, can you share your screen and we can just go ahead and get started?
I will.
All right.
All right. Thank you so much for that introduction. I'm just going to kind of flash through these. I do want to mention that one of the things that I started a little bit ago was I am the founder of the Good Steward Church Academy. It's a membership group and private Facebook group. And I noticed a couple of my members are on the call, so welcome there. We already talked about, I think, do we need to talk about this? How to get the Zoom right and all that?
Yeah,
okay.
yeah.
So if you're looking at Zoom and it's too small, to make your Zoom screen bigger, you're going to move your mouse around, get to that little view button in the top right-hand corner, and then select full screen, and that should get you where you need to go. Greg has already mentioned that we train and support nonprofits for QuickBooks through streamable products and tech support, and some of these other nonprofit services that we have. And we're going to mention that again later, so I won't spend a lot of time. He already mentioned the 2-day webinars that are coming up, so I'm excited about that as well. So today we are talking about pastor payroll. This is the agenda for today. We're going to be talking about the classification of workers, because if you don't really understand that foundation, it's going to be hard to jump into just who can be a pastor and all the other things. So we're going to talk about that first, classification, who can be a pastor, what does dual status mean? That's a whole nother world in compared to most payroll. We're going to talk about housing allowances, how to report pastor compensation, and some of the concerns and misconceptions that I'm seeing in the workplace when it comes to pastor taxes. So we're going to talk about that. So before we get started, I'd like to do a poll on what is your role at your house of worship. I know a lot of you put in that what house of worship you're with, but are you a pastor? Are you the treasurer or a board member? Are you the bookkeeper like in this one church? Are you an outside bookkeeper that maybe supports multiple churches or other? If you could go ahead and put your answer into the poll, that would be great. I'd like to see who we have on the call.
Yeah, there's a few people that aren't seeing polls because they're not in the app itself, I think.
Okay.
And so those people are putting it in the chat, but the vast majority are putting it in the
Okay. Cool.
in there. So we've got 112 people on the call. 83 of you have answered. So just wait a couple more seconds here and see who else might answer. And then I'm going to go ahead in the poll in 5, in 4, in 3, in 2, and now in 1, so we can move on. So this is kind of interesting. So can you see that, Barbara?
Yeah, I can. Yeah.
All right.
Yeah. So a lot of treasurers, board members, bookkeepers. That's awesome. You guys really need to know what's going on with this, because it affects like what you do within your organization. And if you're an outside bookkeeper or accountant, things to be watching for when you're looking at their books, right? So this is going to be great. So I'm excited for you to be here and what we're going to talk about today.
One thing I'll tell you is you know who doesn't know about pastor payroll is the payroll companies. So if you think you're going to rely on them, you better think again.
Yes, thank you for mentioning that, because that is so true. There's so often there's like, well, I have a professional payroll service, but a lot of times you get really not good advice because they just don't understand pastor payroll. Pastor payroll is completely different. It's not really their fault, but these people are payroll processors. So you need to be able to tell them what they're supposed to be doing so that we can do these things right. Okay. All right. So let's go ahead and start with the classification of workers. This is foundational. It's general in nature. But I think it's important that we understand the difference between an employee and a non-employee. So an employee works for the house of worship. The house of worship can hire, they can actually fire them as well, right? You usually have an employment agreement of some kind, even if it's not in writing, at least it's an employment agreement. The house of worship controls your schedule. They train and supervise that person. An employee, the house of worship actually provides the facilities, the equipment, the tools, like the microphone, right? The stage, the office for the employees. Generally, an employee gets reimbursed for their expenses, and the house of worship determines how much they're going to pay and on what schedule that gets paid. So, and generally an employee would be entitled to benefits if they qualify in terms of their hours, etc. A non-employee, by contrast, is considered a sometimes called an independent contractor. They're sometimes called a self-employed person. By the way, there's never such a thing as a 1099 employee. They're either an employee or they're a non-employee. So this is really important to know. So a non-employee has their own business. They're independent business owners. They offer their services to the public. They have a contractual agreement. Again, it may be in writing or it may be verbal, but it's between the non-employee and the business that they're serving. The non-employee controls their schedule. They know what they need to do and how they need to go about doing it. Think about a tax preparer, right? They're the one, they don't come and ask you, well, what do I need to do? And you're not going to supervise or oversee that. A non-employee provides their own tools. They pay their own expenses. They have the potential to make a profit, or they have the risk of making a loss. They determine their own pricing and they invoice for the work done. Contrasted that to the house of worship determining the pay rate and paying them on a regular schedule, right? So important to understand that difference. And the non-employee also generally provides their own benefits, their own insurance coverages, and that's important. So that's a big, long list, but it really essentially boils down to three main areas. One word actually is control. And these three areas: who controls the relationship financially, right? Who determines the pay rate, for example, and the frequency of getting paid? Who determines the time and supervision? In other words, who controls the schedule and the content? In most houses of worship, you have a board, a leadership team. They want to make sure that what the pastor is putting out to the congregation follows along with what your teachings are as your house of worship. So your board actually controls that, even though they're not the ones writing the script, right? Writing the sermons. And then just the relationship. What would the individual say if they were asked, well, what do you do for a living? Would they say, oh, I work for the church? Or would they say, oh, I have my own business and the church is a customer of mine, right? So that's those three areas really determine whether the person is an employee or a non-employee. Okay, so when we report payments to employees, we always use a W-2 form, okay? When we have a non-employee, we always use a 1099. So again, there's no such thing as a 1099 employee or a contract employee. They are either an employee or not an employee. And I think this was really a wise thing on the part of the IRS, that they changed this form. They actually we used to report non-employee compensation on a 1099 miscellaneous, and it was just one box, but they literally created a whole separate form and made it really clear that this is for non-employee compensation. So we're going to ask you questions about that later, but I think that foundation is going to help you answer the question. So let's move on to who can be a pastor. First of all, in order to be considered a pastor, they must be licensed, ordained, or commissioned by a church or a denomination. They need to be a common law employee of a religious body, either a church or, again, a denomination. A denomination being like the mother church, right? So they might be an employee of that. And then the worker must perform ministerial duties. So what does that encompass? Well, they would administer sacerdotal functions like baptisms, weddings, funerals, the actual sacraments themselves like mass or communion, right? Most pastors would be involved in conducting the actual religious worship. So it would be that they would be like the lead pastor or the teaching pastor. You can also be considered a pastor if you have management responsibility, controlling, conducting, or maintaining the church and the denomination. So you can have a pastor of church administration, for example. So a church like Michelle is the church administrator, assuming that Michelle is also licensed, ordained, commissioned, and is an employee, she could be considered a pastor. And then finally, they are considered a religious leader by the church or the denomination. These are really foundational to knowing whether you can actually call someone a pastor. Okay.
It's any one of these four works. It's not like you have to have more than one. Okay.
That's correct.
And I'm kind of surprised to hear that somebody like Michelle, not that there's anything wrong with her, but she's a church administrator, but the church could decide, I guess, if she was licensed or ordained or commissioned by the church, and a church can do it. I mean, I know there's churches that can just decide, well, we're going to ordain you.
Yeah, some churches, right. Yeah, you have denominational churches that there's usually the denomination or the synod, the council that are that determined that. So if there's a mother church, there's usually some preferences on that. Some of the non-denominational churches, they can make some decisions about that locally, but they have to be licensed, ordained, commissioned by a church. And so, like Michelle's saying, she's not ordained in her church. So that's fine. They have to also be doing these other things and be qualified, if you will, to be able to do that. Mm-hmm.
Is that an extra service that we offer? Will ordain anyone in the country?
Well, hopefully
I'm
we aren't
kidding.
just doing that. All right.
Go ahead. Sorry.
Yep. No, it's fine. All right. So why being a pastor is important is when we determine whether the individual that we're talking about, the employee that we're talking about, is considered a minister, really it's not the opinion of the church as much as it is the opinion of the IRS. And so Michael Martin said, in determining who should be considered a minister for tax purposes, the opinion of the IRS is really the only thing that counts. So they have to follow those, they have to be able to meet all of those requirements, those three, although the possibilities, like you said, they can be just one of those. But the reason that is important is because classifying yourself or your pastor as a minister affects how the minister is going to prepare his or her tax return for income tax purposes, as well as Social Security and Medicare purposes. We're going to go into a lot of detail on that. It also provides a potential double benefit of deducting, not only having a housing allowance that is not taxable for income tax purposes, but also the mortgage interest and real estate taxes may be able to be deducted on an itemized deduction form. So that's a double benefit. I will say that though that potential has been reduced considerably when the IRS increased the standard itemized deduction allowance, right? Because you have to still get over that threshold in terms of that. Okay, so also it's important because pastors are exempt from the mandatory income tax withholding. They'll talk about that a little bit. Voluntary withholding of income taxes, they actually can ask to have taxes withheld to cover their federal and SECA taxes. The housing allowance is excludable for income tax. You'll see I have a little asterisk there as well. We'll talk about that in a second. And the exemption from SE tax is available to pastors under very limited circumstances. So the first thing I want to mention is the housing allowance is excluded from income tax, but a portion of it may not be excluded. We're going to talk about that as well as these three on the bottom in more depth as we go through. So you'll see these little boxes pop up, and you'll remember that this is the visual that we had here, but these four things will be covered in more depth. So hold your questions if you have them. All right.
One
So,
thing,
yeah.
Jeff just relates to what you were saying before. So Jeff, if he became an online, let me see, so if I become ordained by an online ministry and I'm not employed by that organization, I would not be qualified as a pastor if I operate an unaffiliated mission or church?
Yeah.
Okay.
You need to be part of a church or organization. Yes.
A
Yeah, so
church that
so-
ordained you, because he's saying he got ordained online, but he's not ordained by the unaffiliated mission or church. In other words,
so if he is working for a church, they can accept that ordination or not. That would be the option of the board.
so the board of that church would need to accept your ordination, Jeff. And if they do, then you'll be able to be considered a pastor, and then you'll have the ability to exclude most or all of your housing allowance and be exempt from some of these other tax withholdings. Okay.
Correct.
All right.
Yep. All right. So let's go ahead and you probably heard this term that a pastor is considered to have a dual status. So when we are talking about dual status, we're talking about that they are considered an employee for income tax purposes, and they are considered self-employed for Social Security and Medicare purposes. So when an individual qualifies as a minister in the eyes of the IRS, he or she automatically becomes subject to the SECA rules, the self-employment tax rules for Social Security and Medicare purposes, and is ineligible for FICA withholding. This is important, and we'll talk about that as we go along. But put simply, a church or other employee of a qualified minister, right? Again, that they meet those criteria that we talked about, should never have Social Security and Medicare deducted from their pay, ever. So if there's a housing allowance involved, that's the only people that can get housing allowances, by the way. If there's a housing allowance involved, you should not see any Social Security or Medicare withheld. We're going to talk about that in more depth as we go through this. So here's a question for you. We're going to do a little poll here. We talked earlier that employees get a W-2 and non-employees should get a 1099. And then we just confused you because we said, well, an employee, a pastor is considered an employee for income tax purposes, but self-employed for Social Security and Medicare tax purposes. So the question on the poll is, which form should the pastor receive? Should they receive a W-2? Should they receive a 1099 NEC? Should they receive both? Maybe either one will work. It doesn't really matter. Or you have no clue. Have I completely confused you already?
Yeah, no, well, while they're answering it, I think it's just so important what you said. Pastors, like every other employee, the government requires your company, the organization that they're working for, to take out Social Security and Medicare taxes. It's called FICA and Medicare. She's calling it SECA, S-E-C-A. But if you are a pastor, then employer will never take those taxes out. You, as the pastor, have to do that. Okay. The other thing I do want to say, just to be kind of global here, is, we're using the term pastor or minister. This also works for any religion. So rabbis, imams, priests. Yes.
Yep.
All right.
Yes,
so,
I meant to mention that at the beginning. Thank you for reminding me of that.
Sure. Now I'm going to end the poll and I'm going to share the results.
Okay.
Looks like a chunk got it right, but looks like we need to kind of hammer this?
Yeah, I'm really glad to see this because the answer to the question is the pastor always gets a W-2, always,
And
and
only gets a
and
W-2.
only a W-2. This is really important because I see 32% or 23% of you actually said they should get both. But just because they're considered a dual status, they're still considered an employee and they get only a W-2. Any compensation, and we're going to talk about compensation, any compensation paid to that pastor has to show up on a W-2. If they are an employee of the church, just like if you have compensation to any employee, any compensation that gets paid to that employee through that church has to go on the W-2, 100%.
And you're referring to, by compensation, I think you're referring to salary and the housing allowance is on the W-2, but not to worry. The housing allowance usually is not taxable, but it still has to be reported on the W-2. So those of you that said you get a 1099 for a housing allowance, that would mean a housing allowance is always taxable, and that's never the case. So
yep, perfect. Yeah, and we're going to show you exactly what your W-2 should look like. I will say that the only time, to the 8% that said, the 7 people that said they would get a 1099 NEC, the only time that a pastor might get a 1099 is if they go and they maybe get an honorarium from another church, right? Not your church, but they go and they're a guest speaker, let's say, they fill the pulpit for another pastor that's on on a vacation or whatever. And if they get paid $600 or more from that church, it would, that other church would give them a 1099. But the church that they work for, that they're considered an employee of, they get only a W-2, and we'll show you exactly what that should look like.
And those 21 people that put 1099 for housing allowance, just put something in the chat to let us know you get it now, you understand, because I want to make sure. So just put something in the chat.
And if you and if you don't, though, we're going to definitely show it to you. So
yeah, but we good? Wendy's good. Anybody else? I just want to make sure. Y'all go ahead. The 21 of you that said both. There you go. Okay. I just want to make sure. All right. Perfect. Okay. All right.
Excellent. Great. All right. So we're going to go ahead and move on to housing allowances. I will tell you that in my Good Steward Church Academy, we spent an entire hour just on this subject because it is so important. So all too often, I see churches that segregate their salary and their housing allowance, and they look at them as two completely separate issues. What I want to suggest to you, instead of thinking of it that way, I want to suggest to you that you think about pastor compensation as a pie. And out of that pie, a piece of that pie is set aside for housing. If you think about it that way, it's the reason that it becomes important is that if the housing allowance changes, the pie doesn't get bigger, right? If the housing allowance needs to go up because a pastor moves into a bigger home or whatever, we'll talk about how you qualify the amount. But if that housing allowance piece gets bigger, that means the other pieces get smaller. And this is important because a pastor can legitimately request an increase in their housing allowance, but that doesn't change their overall compensation. It just makes that piece of the pie bigger and the salary piece smaller, or vice versa. Might make the housing allowance smaller and the salary piece bigger. I say that because I actually had one church, unbeknownst to the board until they started really looking at the budget versus actual, that the pastor was renting, let's say, and the rent increase, let's say. So they go in and they say, well, I need a bigger housing allowance to cover my increased rent. And so the person doing the payroll increased the housing allowance, but did increase the salary. And effectively, that pastor was given a raise year over year over year every time he raised his housing allowance. And because they never decreased the salary portion. And so consequently, after a few years, this person was making about $12,000 more than the board thought they were making. So really important that we think about compensation as a pie, and that housing is just a piece of that pie. So just by way of reminder, the salary portion is included for income tax and SE tax. The housing is excluded from federal income tax and most state income tax, but not all. This is something that's interesting too, because I think it's Pennsylvania. The housing allowance is actually taxable for state income tax. But the housing allowance is subject to SE tax or SECA taxes. And to Greg's point earlier, when I was talking about FICA, I'm talking about the idea that the employer would withhold and then match. SECA is a special way of paying Social Security and Medicare, and it's done on a Form SE. We're going to talk about that.
I think I just want to say, because it does get kind of confusing. So the bottom line is the government gets basically 15.3% of every dollar that you earn. And that's Social Security and Medicare tax. If you work for somebody else, half of it's deducted off of your check, and then the employer pays the other half. But if you are a pastor or you're working for yourself, you pay both shares, and it's called self-employment tax. And she's calling it SECA. Okay. So, and that's why the more the housing allowance is and the less the salary is, it just kind of moves. Well, actually, no, that's a different issue. Never mind. Ignore what I just said. All right.
All right. I just pulled up the Q&A. There are some really good questions in here, and I promise I'm going to answer them, but I don't want to answer them off topic. But don't worry, I do see the questions, and I'll definitely make sure that I cover those things. So I'm going to hold that up there for right now. Okay, so salary included for income tax and SE tax, housing excluded for income tax, but is subject to SE tax, and benefits are an interesting theme because benefits may be taxable for both income tax and SE tax. So we're going to talk about what is really included in compensation, and we'll talk about that. This is a key point though, because having your pastor treated as an employee for income tax purposes is important, because they can now accept benefits that as an employee that aren't taxable, right? So they can be covered by your health insurance. They can be covered by your group dental, your group vision plan. They can be covered by your retirement plan because they're not independent. If they were treated as completely an independent contractor, that would all be on them. So being an employee of the church is a good thing for that pastor. We just need to know what becomes taxable. Okay. I'm going to read this because I think it's really important that a minister's housing allowance, sometimes called a parsonage allowance or a rental allowance, is excludable from gross income for income tax purposes, but not excludable for self-employment tax purposes. This comes straight off the IRS website. I even gave you the little we call it the URL, so that you can go in and you can read that for yourself. But I think it's really important that I just mentioned that again. Let's see. And to that point, a portion of the salary really should be designated for the pastor's tax benefit as a housing allowance, because it'll reduce his income tax, right? And we're going to talk about how we determine that. Okay, so like I said, I spent an hour just on housing allowance in my Good Sir Church Academy, but we obviously don't have that much time. But this was the concept, this lesser of three concept was probably the most, the thing that got the most surprised comments. So what we're going to do is we're going to look at these three pillars. The actual expenses. This is where most churches go. They say, well, tell us what your actual expenses are. What's your mortgage payment, principal and interest, your real estate taxes, your insurance on your home, your utilities, your repairs, your yard maintenance, not your cleaning lady, but your yard maintenance can be included in your actual expenses. What furniture and appliances do you think you're going to buy this year? And what, and maybe even if you're buying a new home, what's your down payment is going to be. But if you think about it, if it's the lesser of three that can only be approved by the board, then we have to look at what are the lesser of three. Well, the second pillar is your fair rental value. And the that would be a furnished rental plus utilities. So if you think about if you are if you're in an apartment, you're not going to have any probably any of these other things like yard maintenance and that type of thing, because that's all going to be covered by your landlord. And then board designated is the third pillar. And this is usually a dollar amount or a percentage of income. So while the actual expenses say that you can declare your down payment in the year of purchase of a new home, it almost always will make your actual expenses greater than the fair rental value or the board designated. So even though it says that you can do that, you probably won't be able to do that, right? So I just want to make sure that that's understood.
Let me ask you just real question. I think I want to put this as a chat. I'm kind of curious. The point is trying to determine what the appropriate housing allowance is supposed to be. And what you're supposed to do is pick the lower or the lesser dollar amount of these three figures. And what I'm wondering is, and I'd love it if people put it in the chat, do you guys determine what the housing allowance is? Is there something that y'all do, or is this something where somebody just told you this is what the housing allowance is and you don't even know that anybody made a calculation? I'm curious. I mean, Barbara, in your experience, see, look at Wendy. She allows the clergy to determine their own housing allowance. So, I mean, that's kind of scary. Diane just says it's 25% income. Really, you're supposed to be doing this calculation, right, Barbara?
Yeah, you really are supposed. It's supposed your housing allowance needs to be approved. But what a lot of people will do in this, and to that point, is that they'll fill out they'll even maybe have the pastor kind of fill out a kind of spreadsheet. I'm going to show you something on the next screen that I think actually I'll. Well,
Barbara,
anyway.
let me just Barbara, this SID, 95% of the person's salary is housing allowance.
Yeah,
now,
that's a great question. So I was actually going to mention that in the board designated. So somebody said,
can't be right. That can't be right.
Well, so some churches will say it needs to be either a dollar amount or a percentage of income. Somebody said 25% of income. This is one of the pillars that's often overlooked. And if as a board you make the decision, for the example, that is poor stewardship for a pastor to have housing expenses in excess of, say, 25% or 35% of total compensation, then you've actually eliminated the possibility of that pastor potentially getting their full tax benefit. And while it seems really prudent to say, hey, we don't think that's good stewardship on the part of the pastor, you may want to reconsider that 25% number, because other factors may need to be considered. Maybe there's a spouse that earns enough money to more than cover their housing expense or housing. So 25% of only the pastor's salary may be a really small number. So, but it's still a pillar.
I'm okay with, like Sid saying, we decide as a board 95% of the salary can be a housing allowance. But what I'm thinking, Barbara, is that is that board looking to see that, oh, by the way, furnished, fair rental value and actual expenses is most likely going to be less than that 95%. And so if you're just going with 95% without doing that calculation, your housing allowance is too big. I mean, am I missing something?
Yes.
Okay. All right.
Yes, exactly. And that's why I wanted to show you this. So having some kind of a housing allowance worksheet where the pastor would fill out what they are estimating as their actual expenses. Again, it's estimated. That comes back to the board, and the board should then be saying, okay, the pastor thinks that number should be, let's say, $24,000 or $2,000 a month, and then it's up to the board to say, well, yes, but is that reasonable for that home in that neighborhood? If it was a furnished rental, what would be the rental, and how would they get that? That fair rental value is probably best determined by a qualified real estate agent, right? Call up a real estate agent and say, hey, we have a 1,800 square foot home in this area. Do you have any market comps on the what the fair rental value would be for a furnished rental, right? So taking that extra step is a lot of times ignored, and it's really, really important. And then to the point of the one that said 25%, if the board has said, we will never approve a housing allowance for more than 25% of compensation, and let's say the whole pie is $80,000, right? Remember, go back to the pie, and they say, well, only a quarter of that pie can be for housing allowance. You're talking about $20,000. So even if the pastor says, well, I think it's going to cost me $24,000, and let's say that even the fair rental value, we come out that, yeah, it's $2,000 a month, the board, by saying they can only get 25%, that number becomes 20,000, whether that pastor likes it or not. So it's really important that all of that get documented. I do have this, this was actually a resource that I created for my Good Steward Church Academy. There's a tiny URL. There's also a QR code, and you can actually go and get that for free. Just type in the word pastor, and you'll get this housing allowance worksheet for free. What I do want to mention are a couple of suggestions on this. So one is this document approval should be in writing, right? You want to document how you came up with that this is okay for the pastor to declare this amount. I would, on this example, I show you that this is for the tax year, the tax return year. So say we're doing this, let's say in December of 2023, and this is for the tax year 2024, right? Because it has to be done in advance. You might want to do a safe harbor clause that says this is for 2024 and beyond until the pastor changes it, until the pastor comes back and asks for a new approval. So that's important. That I think that's a good safe harbor, because what happens at the end of 2024 otherwise? On December 31 of 2024, if the pastor does not give you a new housing allowance, that housing allowance is no longer valid. And under audit, that pastor could lose his housing allowance. So having a safe harbor clause is a good idea. It's not your job to become the pastor's tax advisor. Always tell them to refer to someone that really understands pastor taxes to help them understand what's going on. And I will tell you, there are a lot of tax people that don't understand pastor taxes. So, but it's important that you don't put yourself in that position and open yourself up to liability as a board member or as a payroll person. Like I said, seek the guidance of a qualified realtor regarding the fair rental value. Sign and date the form. I included that little box over to the right, and record it in the board minutes, right? We've approved the housing allowance for Pastor John, and attached is the housing allowance worksheet. Oh, and don't forget to tell your payroll service, if you're doing your payroll, about these appropriate adjustments so that those changes can be made as soon as this housing allowance worksheet is approved. Really important. Okay, so reminders about housing allowances. They must be formally designated and approved in advance. Okay, they cannot be made retroactively. So even if the pastor moved into a new rental in March and he goes, oh my gosh, I never changed my housing allowance, and now it's September, and he goes, well, can I go back and change it? No, he can change it proactively, but never retroactively. So so just those are a couple important things to note. mostly because if you think about it, like logically, it makes sense, because if the piece of the pie, the housing allowance, gets bigger and the salary gets smaller, then you would actually have to amend your tax returns, your 941s. So you don't want that happening, right? That the pastor should be, but to that point, I think you can allow your pastor to update their housing allowance anytime during the year. Some churches are like, nope, we're going to determine this and we're going to do it once. I know you, some of you mentioned that your congregation has to approve it. Do you want to go in front of your congregation every time the pastor wants a new allowance? That might be a reason not to do that, but it is definitely possible. Okay. Yeah.
Oh, yeah. I'll let you. I want to go ahead and address the questions related to the housing allowance before you move off topic, but it seems like you have a little more to teach here. So go for it.
Yeah. So, so I mentioned, right, the little asterisk next to the word is. The reason I said that is that housing allowances are not always excluded from income tax, even if it's been approved. And the exception, and this exception is really important to understand. So the exception is that if your housing allowance exceeds the lesser of reasonable compensation, the fair rental value of a home, or your actual expenses, and it's really the actual expenses that I want to focus on here, directly related to providing the home, you must include the excess in your income. So you're going,
you being the pastor, not
being the pastor. Sorry, you being the pastor.
Okay.
Correct. And this is important too, because ultimately it's the pastor's responsibility to determine if they had an excess housing allowance. So if they said, well, I think it's going to be $24,000 and the board approves $24,000, and then they kind of calculate through the year based on what would have been qualified expenses based on that pillar, right? That they only spent $23,000, then they've actually received $1,000 more in taxable income. So here's a little pro tip that you might suggest to your pastors. Normally in payroll, you have the opportunity to split your net check into two separate accounts, right? Sometimes checking and savings, right? Well, you might suggest that your pastor put the housing allowance into a separate account and then suggest that they always pay only qualified housing expenses out of that account. And at the end of the year, they'll know if there's any money left over. So just that's kind of a nice thing to be able to do. You might be asking, well, if they don't spend all of it, do I, as the payroll person, need to go back and ask the pastor for this? No, you do not. The pastor is responsible for reporting any excess housing allowance on their personal tax return. They don't need to tell you about it in the payroll department. They don't need to tell the board. But if they are getting an excess housing allowance, they may want to reduce their housing allowance going forward, right? So that's why it's important that they keep track of it. And where they do that is on line 1, right? Where they would put their W-2 income, they would just say excess housing allowance $1,000, and they would add it to that.
Line 1 of the tax return, you're saying?
On the tax return, line 1
so like
of their
if they
personal
got
tax return.
Yeah, so line 1, they would just put it right on the tax return. All right.
Yep.
Well, let me know when you're ready, and I'll do the questions.
Yeah, I know one person asked about, I thought that it was, I think it said the housing allowance. Go ahead and ask me, and I'll answer.
Okay, so I'm gonna do the ones. I'll just do them, and I'll remove them as I do them. So
sure.
Linda, are you there? Linda, go ahead and say hello in the chat. I want to make sure that people are listening. Linda. Linda Singer to the front. Linda, there you are. Hello, Linda. What happens if the clergy is reporting an incorrect housing allowance? What are the risks? So I think you've already kind of covered it, but I guess there's no risk to you, but there's a risk to the pastor, right?
Right. The risk to the pastor, the risk to the pastor would be if they had too much too much housing allowance and they didn't do the excess as additional income. Under audit, they would have to prove that their housing allowance was correct. By the way, I do want to mention this. I didn't even put it in a slide, but it's your primary residence only. I had a church that had they had a lead pastor, and then they ordained and commissioned the wife as the pastor of women's ministries. They had a home in the valley and they had a cabin in the mountains, and the pastor took housing allowance for the home in the valley and the wife took housing allowance for the cabin in the woods. No, one primary residence in a family. So be really careful about that, because that's that's really an important part. But yes, so that's the answer to that. Go ahead.
So Wendy, we're talking about the audit, like if the pastor gets audited, that's what we were referring
on his
to.
personal tax
on his
return.
personal return, he would be responsible for either proving that he really, used the money, or he's going to have to put extra on his tax return. Richard Barrier. Richard, are you here? Richard, say hello, Richard. Richard, pastor in parsonage gets one check a year for $36K. Can it all be designated as a housing allowance? Well, you'd have to go through the test, I assume, right? So how would you answer that?
Yeah, so so even if they have even if they're living in a parsonage, a portion of their income is actually, if they get $36,000 as their compensation and they're living in quote unquote free housing, that's an additional benefit. And let's say that that's worth $12,000. $36,000 is still their salary, but their housing allowance or their housing income is in box 14, added to it, not subtracted from it. Did that answer your question?
Well, I think this pastor is getting one check a year for $36,000, and they're calling it parsonage. I think, Richard, you're saying they don't get any other money from the organization. And I assume, Richard, they're not living in a house that's provided by the church. Richard, is that true?
Well, parsonage usually is considered.
No, they're living
they're
in
living
there.
in a parsonage that's owned by the, usually that's owned by the house.
So now they're getting two things. They're getting free housing, which has to be valued, and they're getting 36,000. So
correct.
More than likely, this is not cool, Richard, right?
Right. So the 36,000 is fine. That's going to be in box 1. We'll talk about that. But the value of the housing allowance, if they're saying it's valued at $12,000, that would be the housing allowance. That would be additional income to him, because in a sense, he's getting the benefit of that.
Yeah, but that 36 does need to be in box 1. He thought
correct.
Box 1 would be 0 on the W-2.
Right. Or like I saw in the Q&A, he said that the box 1 would be 24 and box 14, where the housing allowances would be 12. No, he's got the whole 36,000 plus the benefit of living in a parsonage for free.
Okay, I got you. All right.
Yeah.
Bill, there's a couple of people want to know if you get CPE credits for this. I don't know if we do or not. If we can provide them with a CPE credit. Let's see. Pastor Stacy, what if the pastor is not a salary and is given a love offering throughout the year? So what do you say about
you're
love
gonna
offering?
love this. We're going to talk about that. What's included in compensation. So I'm going to pass on that for just a moment.
Okay. All right. And then I'm just trying to see.
Oh, Tammy asked, I thought reporting the housing allowance on the W-2 is optional. Technically, yes. I think best practice is to put it in box 14 of the W-2. Because it's an information only box. But if you don't put that housing allowance in box 14, then you should have a letter in writing that says you also received a housing allowance. It's your responsibility to make sure that you haven't, that you don't have excess housing allowance compared to actual, those kinds of things. So really important.
You're also paying the Social Security and Medicare tax on it, right?
Right,
So
because, well, you're paying that on your SE form, but they have to know how much that number was, and it would be really easy to ignore that if it's not either on the W-2 or in writing to them. So
right.
Yeah.
What if a church, and this has to do with benefits, so you might want to pass on it, but what if a church pays the pastor's life insurance? I assume that's a benefit.
Yeah, Grace, great question. If the beneficiary of that life insurance is the wife, then it is going to be there is a threshold. If it's a group life insurance that everybody that's an employee gets a certain amount of life insurance as a benefit, then it would not be taxable. But if they're saying, well, no, we're going to pay for this because we think it's important, and the pastor is the only one that's covered by that, and it's not a group life insurance policy, it's taxable income. It's a taxable fringe benefit.
Okay, so this one says the housing allowance is reflected on the W-2. Does the pastor prepare a Schedule C then?
No, no, the housing allowance, no. So a Schedule C, just for everyone's benefit, a Schedule C is a different form that's added to a regular form. That's for a self-employed person that gets a 1099, and then from that they can normally deduct any expenses. Your housing allowance doesn't create Schedule C income, right? It just creates taxable income for SECA tax purposes, SE tax. Okay.
All right.
Good question. Okay. Excellent questions, actually. I really love those.
One more here. If a pastor, this is for Miriam. Miriam, are you here? Miriam?
I think that one just came in, so I'm sure
it
she's
did. Well, I just want to see. There you are, Miriam. If a pastor has his own home and they only give him a housing allowance, no income, is that okay? Well,
question. So this goes back to, thank you for bringing that full circle. Because Greg actually asked that. Well, is it okay for a pastor to declare 95% of his compensation as a housing allowance? And to that point, that's what you're asking. You're saying, well, what if there's no other compensation other than a housing allowance? Yes, compensation could be 100%, considered 100% housing allowance. But again, you have to be able to go through those pillars and determine that it's the lesser of the three. And normally this is for someone that is maybe a part-time pastor. They're only working, they aren't getting a quote unquote full market value compensation. So they could technically have a housing allowance that is 100%. Okay, Colette says, if the housing allowance does not go on a Schedule C, then where is it reported? I am so glad you asked. We're going to be right into that in a second. So we'll talk about that.
One thing I will say back to Miriam. So the pastor has his own home and they just give him a housing allowance and nothing else. So what I would say, Miriam, is, does the guy eat? Does he do anything besides live there? Because if he does, where is he getting that money? Because if he's getting it from the housing allowance, then he's not using all of his housing allowance for housing, and therefore some of it's taxable. But if the pastor's spouse is working or the pastor doing something else, then might be able to be cool.
Right. And yeah, and I was just going to say, Tammy answered the question. He could be working in a secular job. So there are a lot of pastors that really are not compensated by the church fully, and they have another job that's paying for all of that other stuff. So yeah, part-time pastor would be.
I'm going to do one more and then we're going to leave.
Sure.
Because I know we've got other stuff, but the housing allowance is a big deal.
This
is Bobby. How do you handle housing costs for an employee who is not a pastor, but they reside in a church-owned parsonage?
Same. If they are getting value, any personal value, it's actually considered income to them.
So they're not a pastor. So it's not like they're getting a housing allowance thing.
Nope.
They just have income.
They just have income. Is going to go into box 1 of their W-2.
Yep.
And that value, the church would need to withhold Social Security and Medicare because they're not a pastor, remember, so they're now covered under FICA, and they would have to withhold some taxes for that, and they would also the church would need to match that if they're not a pastor. Yeah. Generally, that doesn't happen, and probably a better way to handle that would be for the church to actually pay that person reasonable compensation, and then let that renter, if you will, that person that's living in that parsonage, have that person pay the church for the value of it.
Pay
then,
it back.
Then everything is a lot easier.
Yeah. Rather than just letting them stay rent free, just increase their salary, give it to them, and then make them give it back to you for rent.
Yeah.
And then you'll
essentially
make sure
that's what's happening. That's what's happening on the W-2, but it's all kind of behind the scenes. And so it gets a little dicey, because all of a sudden they're like, well, wait a minute, I didn't know I was going to get taxed on that. Well, someone else could have lived there. That's the whole point. Someone else could have lived there and been paying the rent to the church. So
okay, we got a half hour left.
Okay, I got lots to cover.
I'm going to have one word here in the chat. Just y'all let me know how you're doing, because we're not going to take a break. How are y'all feeling? Are you happy? Are you excited? Are you confused? Are you overwhelmed? Are you what's going on? Kim's good. Good. Okay. Everybody's cool. All right.
Good.
Okay. All right. Half hour. Go for it, Barbara.
Okay.
I'm not going to interrupt. I swear.
Yeah. No, you're good. Okay. All right. So, okay. Sorry, I'm going to go to Mary. Just for clarification, the church does not legally have to include the housing allowance on the W-2. That's true. It doesn't have to go into box 14, which we're going to mention on this next screen. But they should issue in writing a letter that says, dear pastor, you were given a housing allowance of $24,000. And either way, it's the pastor has to claim it on their personal tax return, yes, for SE tax purposes, but not income taxes, which is why you have to do it in writing, because you can't, you don't want that pastor to come back and say, I never got notified. I don't remember what my housing allowance was, right? It protects the church. So, so really important. Okay, so this is what the pastor's W-2 should look like. Box 1 should be all of the total compensation, not including the housing allowance. We're going to talk about that. So hold your questions on that. Remember the little box that says they're exempt, the pastor is exempt from mandatory income tax withholding. So this federal income tax could be zero. They don't have to, a pastor does not have to have you withhold federal income tax. Boxes 3, 4, 5, and 6, Social Security wages, Medicare wages, Social Security tax withheld, and Medicare tax withheld. Those should either be completely blank or they should be zeros. Personal preference, I think the housing allowance should definitely be reported in box 14. It eliminates the need for the letter. It eliminates the idea that, well, I never got that letter. Nobody ever told me about it. And then under audit, the IRS finds out that they're getting this housing allowance. I just recommend always put it in that box 14. It's an informational only, but it's also a great thing to look at. So I had one of my clients, every year they would have me come in and review their W-2s. This particular church had multiple locations, and all the child care workers at every location were considered employees. So they had well over 300 W-2s at the end of the year. And I would go through, and it was such a great trigger. If I saw a housing allowance in box 14, I immediately went up here and said, are there numbers in here? Because potentially there was something that maybe that first check, somebody forgot to mark the box that they were supposed to not be subject to Social Security and Medicare. And it was such a great way to cross-check and make sure that we didn't accidentally withhold taxes that we shouldn't have, okay? Box 16, which is your state wages, is generally the same as box 1, unless the housing allowance is taxable for state tax purposes, right? The housing allowance is not taxable for federal income tax, but you need to know what the rule is in your state. And I believe it's Pennsylvania that you would have to include the housing allowance as state wages. So really important to know kind of where things go. But this is what it's going to look like. So the question that comes up, and several of you have asked questions to this effect, is, well, what's really included in box 1, right? What's really included? If we know that there's the compensation is a pie, and we know that the piece of the pie that went to housing went to box 14, what all needs to be included in box 1? So let's talk about that. We know the salaries, right? And any bonuses that get paid need to be included in box 1. Cash and gift cards. This is something that a lot of people overlook. They go, well, we just did a gift card for, $100. All the employees got a $100 gift card at the end of the year. That's considered a cash equivalent. And the IRS wants that on their W-2 as additional box 1 income. Reimburse FICA. A lot of churches will say, well, we kind of feel bad about the fact that any other employee, we're going to pay half of the Social Security. So we're going to reimburse the pastor for half of his Social Security and Medicare that we would have paid had he not been a pastor. That's a beautiful thing to do, but that becomes taxable to him because it's not a reimbursement in the sense that it's a business or a church expense. It's his personal expense. So you're paying a personal expense, it automatically becomes taxable. So just realize that increases his taxable income if you do that. Personal insurance, I mentioned this because I have several clients where their pastors are getting to Medicare age and they say, well, I don't need to be on the group health insurance plan anymore, but could you pay for my Medicare supplement premiums? The answer is yes, we can, but it's it's taxable income to you. So probably not the best thing to do, either increase their compensation to cover that, but it definitely is taxable to the employee. Non-accountable allowances. Oh dear. So tell me what are some non-accountable allowances that you've heard about in your church? Maybe let's talk about that. Anybody?
Put it in the chat if you know what
Yeah.
a non-accountable allowance is, like
Auto
an
allowances.
auto allowance.
Yes.
Yeah.
Yep. That's one of the main ones. But I'm going to mention this because auto allowances for sure, rather than getting reimbursed. A cell phone allowance. Yeah, cell phone allowances are interesting. So if you're paying the whole cell phone bill and that actually includes you're kind of paying for the equipment, then yes, that would be a non-accountable. If you're saying, you know what, we're just going to give our pastor a small, let's say, $15 a month to cover the business use portion, that one doesn't bother me so much, but yeah. Disability. I'm going to talk about that in a second. Hold that. Would you remind me about that, the disability? Because I do want to talk about that. So yeah, one that is often overlooked is pastor discretionary accounts. A library allowance would be similar, right? Where the church says, we'll give you, let's say, $500 a month, and you can pretty much do anything you want with it. We expect that you'll use it, maybe to bless people in the congregation or whatever. If they don't have to account for that money, it's taxable to them. If they don't have to provide a receipt, it's taxable to them. If you say, well, we're going to give you a library allowance so that you can buy books to help you with your sermons and your research, if they don't have to provide accounting for that and receipts to back up that they've spent it for that purpose, it is income to them. We have to be really careful about that. Sabbatical allowances, just have the summer, great time to send your lead pastors, give them time off, give them extra time off, maybe give them a little bit of an allowance so they can go on a sabbatical, get refreshed, come back to the pulpit. Taxable. Moving expenses is another one. This is not really non-accountable, but this was something that came up actually in my academy, where somebody said, we have a new pastor and he's moving from the States over to Hawaii, and we want to pay their moving expenses. Since 2017, when the IRS threw out moving expense as an itemized deduction, they also made any reimbursement for moving expenses consider personal. You're reimbursing them for their personal move, and it's taxable income to them. And just a point about this, if you think about it, when the IRS suspect abuse, the abusers end up ruining it for everyone, right? But you think about that, right? Oh my gosh, I have an opportunity to go be a pastor over in Hawaii. Always wanted to live in Hawaii. I get over there and I go, well, they're not going to pay me enough, so I'm not really going to be a pastor for them. I'm going to go and work somewhere else. But I got the church to pay for my move, and now I'm there. Or a brother, right? Well, we want you to come over, and the church will pay for that. You know, anytime that there's abuse, the IRS gets really big on that. And then finally, just went past. Hold on. Honorariums. Pastor appreciations, love offerings. Pastor appreciation comes up in October for a lot of churches. So it's really opportune time to be having this. Those are considered income. If a love offering is received as a non-deductible from the congregation, can it be given as non-taxable for the pastor? You shouldn't even know about that. If a congregant wants to give the pastor a check for $100, you should not, as a church, even know about it. Okay, that's a gift. It's between them and the pastor. Whether the pastor should be picking it up as income, I would have him talk to his tax advisor on that. But you shouldn't even be involved in that.
Yeah. If it goes through you, if it goes through the church, I'm sorry, you're putting it on there. It's on the W-2 in box 1.
Yeah.
And the same is true. This one person says, it was some back in here somewhere, somebody only gets a love offering. They don't get, they only get a love offering. They get nothing else. Well, I mean, whatever, they're getting paid.
I just came back from a conference in July, and there was a church that had white envelopes and blue envelopes. And the white envelopes were all the donations to the church, and the blue envelopes never got opened, and they were just given to the pastor. And the pastor got no income, from the church. They just got the blue envelopes. Well, the pastor ended up being audited by the IRS and found out that he was bringing in over $200,000 a year and not reporting any of it as income. It was a big IRS case, and something definitely to be considered. One of the things that I do recommend is, if you are going to accept pastor appreciation money, put it into a designated fund. And which actually leads me to my next poll question is, do you guys do designated funds? How do you keep track of that? That if your donor says, I want you to give this to the pastor, right? And you collect, let's say, $4,000 in October for Pastor Appreciation Month, and then that you make sure that you follow that donor's restriction on that money, and you give that to them as additional compensation. How do you keep track of that? Do you guys have designated funds? Do you collect designated and restricted funds? And I'm not talking just about pastor appreciation, but any designated and restricted funds.
Let me, and I'm going to put that poll up in a second, but Diane Vaughn, again, what if the ministry somebody wants to give the pastor a love gift, but have the church write the check? Again, no. If you want to give them a gift, give them a gift. Right. But anyway, the bigger question that she's asking, and I'm going to put this up right now, is you guys have designated funds or restricted funds. They all do. This is unrelated to the pastor's designated fund. How do you track, or do you track them? Or actually, no, this is asking, do you even collect them?
I just am curious, do you have them? I mean, some churches are like, we don't take any additional money other than general offerings. That would be a no, right, for you guys. If you're saying, oh yeah, we have a few of them, like pastor appreciation, we kind of track that, or maybe mission, something like that. Maybe you have a whole bunch of them. I actually had one client that had 54 designated funds. So when I say designated, where the donor says, I want you to use it for a specific purpose, and it's up to you to track that so that you don't accidentally spend it to pay the electric bill, right? So, okay, good. So go ahead and
yeah, I'll go
click
ahead
on
and
the
end the
polls. Yep.
poll, and you can see the result here.
Yeah. So yes, a few, and yes, a bunch. So yeah, this is very typical. 75% of you are saying that you have designated and restricted funds. I'm going to encourage you guys to be on the House of Worship training in September. We talk about how we can make this your life so easy. If you're using spreadsheets, we eliminate all your spreadsheets, makes it really super understandable for the board. And the board loves it. So I'm going to encourage you to sign up for either the desktop or the online version of the training that's coming up at the end of September. I'll be teaching that as well.
So Jeff said, can you briefly explain some of the best practices in chart of accounts to easily track the different funds? So this is what we're going to be doing in September.
Right.
Briefly explaining is probably not going to work.
Yeah, it's a game changer. I'm going to just say this is the easiest brief I can say. It is going to be a game changer for your organization. Every church that that has adopted this, they are like, oh my gosh, I finally understand my numbers. I don't have to have multiple bank accounts. I know exactly how much is still left in the account. I can report the food pantry to the people that are in charge of the food pantry. They know exactly how much money is there. It's a game changer, but we're going to talk about that, and it's amazing. So I hope you'll be on that call.
So Jeff, just so that you know, and everybody, this training that's coming up in September it's more than just the designated funds.
Correct.
It's everything you need to know about QuickBooks if you are a house of worship. But Jeff is using classes or locations, and we're not doing that because it's a mess. He hates it.
Yes, you're going to love what we have.
And then Tammy wants to know when is the training, which is happening in September. We'll pop it up on the screen in a few minutes. We've got about 15 minutes left.
15 minutes. I'm gonna go through these. The last section is just what are some common misconceptions about pastor taxes. We've touched on some of these, but I just want to reiterate. One of the common misconceptions is that churches can pay or reimburse pastors' FICA. We'll talk about that. Pastors cannot have any taxes withheld. That's another common misconception. And the third thing that I've seen in some of my clients is that people think, well, pastor must file a Form 4361, otherwise Social Security and Medicare taxes have to be withheld. We're going to talk about those three in a little more depth here. So the first one, the first common misconception is churches can pay or reimburse for pastors' FICA. Well, they can, but reimbursements are always considered additional compensation to the pastor, and they're going to show up on the W-2 in box 1. And always a pastor pays SECA taxes personally. Social Security and Medicare taxes are the pastor's personal responsibility. So if we ever pay personal expenses, it's going to end up as income. So we just talked about that. We saw that in on box 1. We said that the reimbursed FICA or any kind of a personal reimbursement is going to be taxable. Okay, so it's going to show up in box 1. As far as how the pastor pays it, this was a great question from someone else. How do they report this? They report it on the self-employment tax form. It's a Schedule SE. It is a form that gets attached to the pastor's personal 1040. And when you fill in all the blanks correctly, it'll calculate the SE tax appropriately. So that's how they're going to actually file their tax return. Okay, the second one, common misconception. Pastors cannot have any taxes withheld. Well, they actually can have taxes withheld, but if they don't have any taxes withheld, then the pastor is likely going to need to make quarterly estimated tax payments. Okay, but a pastor can actually have extra federal withholding tax to cover not only his income tax, but also both sides of his SE tax. So, but nothing appears in box 3, 4, 5, and 6. That doesn't change that, right? It's not like the pastor can go, hey, could you guys just take out Social Security and Medicare? No, they can't. But what the pastor can do, I'll show you in a second. So the first thing is, If they have no taxes withheld, then their estimated taxes are due quarterly. And I put quarterly in quotation marks because the IRS loves to mess with us, right? The first quarter makes so much sense, right? First quarter, January to March, taxes are due April 15th. Totally makes sense. Guess when the second ones are due? You would think second quarter, April, May, June, the taxes would be due maybe July 15th. No. The IRS says, nope, they're due June 15th. So this one and the next one, by the way, are the two that are missed most often, and it creates penalties and interest for the pastor. The third one, you'd think third quarter would be July, August, September. Taxes may be due in October. No, they were due in September. So your pastor has to be really on top of this stuff. Again, this isn't the job of the church, but for your pastors that come in confused, they need to understand these dates. And then finally, the fourth quarter, which would be covering October, November, December, isn't due until January 15th, which now that one makes sense. So just telling you the really weird dates, you can pay them with these little coupons, or you can pay online, which I recommend because I've had a couple clients come back and they said, I know I sent it. I know it was postmarked by these due dates, and the IRS came back and said, yes, but we didn't get it until after that day, and we're penalizing you for that. So paying online is probably the way to go. Okay. But pastors can have extra federal withholding tax. So what they do, and this is one of those little ones with a star, they can voluntarily say, hey, I know that my SE tax is going to be, well, let's do the math. If you have $80,000, that's all subject to SE tax, right? And you know that you're going to essentially be paying 15.3% just for SE tax. That, oops, that's 8,000. I didn't do that right. Hold on.
12,000.
I was like, yeah, exactly. I want to make sure that you guys times 0.153, $12,240, right? That's going to be the SE tax. It's a really good idea to take that number, divide it by the number of pay periods. Maybe if you get paid twice a month, that would be 24 pay periods. If you get paid every other week, that'd be 26 pay periods. And you would ask your payroll to add extra withholding, in this case, $510 to whatever the federal withholding tax is. And so that you are covering, that money is already set aside. Let's think about that. If you owe $12,000 plus some federal income tax on your salary portion, and you haven't set that aside, you have to either make your estimated tax payments, right? That could be really a significant number. Or wouldn't it be easier if you just had your payroll service or somebody internally, if they're doing payroll for you, to just take that extra amount out every paycheck, and then you don't have to worry about it. The church. Yeah.
Let me just make sure that people understand this. So the paying of the SECA taxes and the paying of the income taxes, it all ultimately just ends up on one individual tax return. So what Barbara is suggesting, and listen very carefully, Richard and TJP, is you can say, you know what? I understand that you want to withhold for Social Security and Medicare. We can't. I know you want to. We can't. I know you want to. So we're going to do it, but we're going to call it extra federal withholding because it's all going to get lumped in your tax return anyway. But into what who was it that said this? Anna is withholding Social Security, Medicare, and federal. Emma, if your W-2 for that pastor has a number in Social Security and Medicare, that's wrong. Okay. Yep. You can withhold it, but it has to be federal withholding, not matched by you, just stuck in box 2.
Yep. Right. Exactly. Okay. And then for state purposes, you can also have, there's a similar form. So check with your state. If they want to have extra withheld for that, they can do that as well. And then the last thing I want to talk about, common misconceptions about pastor taxes. I actually had, I was working with a church that was having an audit done, and the auditor noted that one of the pastors, pastor of student ministries, was having Social Security and Medicare withheld, even though he was getting a housing allowance. And when it was brought to the attention of the board and leadership team, they said, oh dear, I'll make sure he fills out a form 4361 right away. No, the form 4361 has no bearing on everything we've talked about. The pastor does not need to fill out a form 4361 to not have Social Security and Medicare withheld. The pastor never has Social Security and Medicare withheld. Okay, so that's really, really important. What the 4361 is it's an application to exempt themselves, the pastor, from having to pay self-employment taxes. And this point that I made earlier, the one little star, this exemption for SE tax is only used under very limited circumstances. I'm not going to go into a lot of detail, but I just want you to know that you cannot fill out this form for economic reasons. You can't say, well, I really don't want to pay 15.3%. That's not a valid reason. Well, I really don't think the Social Security will be around by the time I retire. That's not a valid reason. I don't think they invest very well, so I think I could do a better job myself. That's not a valid reason either. This form creates an irrevocable election between the pastor and the IRS. So if you do file a exemption form 4361, you are certifying, and this is exactly off the form itself, that you're conscientiously opposed to the acceptance of any public insurance that makes payments in the event of death, disability, old age, or retirement, or that makes payments toward the cost of or provide services for medical care. Doesn't that sound a lot like Social Security and Medicare? So you're basically saying, I'm opposed to accepting that as part of the 4361 for religious reasons, by the way. For religious reasons. So when you fill that out, you're signing that under penalties of perjury. When you file the IRS, it has to be done in a timely manner. The timing deadline is the due date of the tax return after you have had $400 paid you in ministerial compensation. Those 2 years don't have to be consecutive. So if you work for a church, then you went out in the secular world, you worked in a church, a few years ago, you made more than $400, and now you came back and you're working again, and you're going to make $400. That old income counts towards that timeline. You need to inform your church or your licensing body of your conscientious opposition. One, so that they can verify that what you're doing is right. And two, they don't want you to become a benevolence problem later, right? If you aren't making up for these payments on your own for what Social Security and Medicare would have paid you, you may end up being a risk to them, that they're going to feel like they need to pay you for that. So they want you to inform them so that they know that you filed this form. Then the IRS is going to come back and they're going to verify, are you sure under penalties of perjury that you're not doing this just for economic reasons? And you have to verify that. And then you actually receive the approved form. Up until you receive the approved form, you still have to pay SE tax, even if you filed the application. Okay, so that's important. Okay, let's see. So we just talked about that. Churches can, we talked about that. We talked about that. We talked about that. One more slide here. Here's some useful resources if you're interested. These URLs are available. You can check that out. And here are the dates again for the upcoming webinars. And Greg, do you want to take over? Do you have any other questions?
Yeah, I'm going to go ahead and share my screen. And there's a couple more things I wanted to ask you, Barbara. I'd like everyone to listen, but when you if you want to go to the 2-day webinar series, it's 2.5 hours a day. Yes, we'll take breaks. If you're using QuickBooks Desktop, it's happening September the 20th, which is a Wednesday, from 2 to 4:30 Eastern Standard, and then the next day, 21st, the following week, it's for those of you that are using QuickBooks Online. And it's normally $2.99. You go to QuickBooksMadeEasy.com, and then Bill, if you could maybe put the link in the chat, and you'll see it right here. Here is a QuickBooks for Houses of Worship 2-day webinar series for QuickBooks Desktop, and here is a 2-day webinar series for QuickBooks Online. If you do have investments, by the way, I happen to be doing a webinar tomorrow on how to track investments in QuickBooks Desktop. And then again, the next day for QuickBooks Online, this would be like recording off brokerage statements and stuff. And then if you can't come to this live training, we do have a Houses of Worship on-demand training product. It's $2.99 normally. You're getting it for $2.69. Here's the code TS30 off. And I didn't tell you the code for this. It's TS50 off for the live webinar series that's coming up. So when you are buying this thing, when you're at checkout, you click on it. When you're buying it, you put the code in when you're in checkout. Okay. And then I think I wanted to ask you, I'll leave this code up here. There's a lot of stuff, Barbara, that is like love offerings or gift cards or, other benefits and stuff that are given to them that there's not really a check that flows through the bank account. Sounds to me like it needs to be on box one. Sounds to me like you're going to be calling the payroll company, telling them about this stuff, aren't you?
Mm-hmm. Yeah, for sure. Well, and I mean, yeah, if you know that you received, let's say $4,000, I use that example for the pastor appreciation, you can be calling the payroll company and saying, we're going to give him a quote unquote bonus, because essentially what it is, for the $4,000. So
right, but don't withhold Social Security on it. And theoretically don't withhold anything if they've opted out. We just need it reported. Talisha wants to know when the presentation will be available. Aretha, I know you said they're going to get the recording for this. Any idea when that might happen?
I think I'll be able to send this tomorrow.
Oh, perfect. So you'll get it tomorrow. And then
and they're going to get a PDF of the actual deck. So you'll see that. You'll have all the QR codes, the URLs, all of that will be in the deck.
Okay, so how does everybody feel? We're done now. Is everybody excited, happy? What do y'all think? We really got into the weeds here. I hope we didn't overwhelm anybody. And if you decide that you need more help, just go to QuickBooksMadeEasy.com. You can sign up for a tech support agreement with us as well. And we actually have a coupon for that too. 1 year of tech support is normally $4.99. We're giving it to you for $2.99. TS $2.99. These codes are only good until Saturday night. This gives you $200 off a year of tech support. And yes, you can talk live to either me or Barbara. We can even dial in to give you answers to your questions. All right. Yep. I'm going to turn it back over to you, Aretha, to go ahead and finish up. Oh, you're on mute.
Okay, thank you. This was wonderful. I learned so much. I'm not a pastor. I'm not a church administrator. So I know this was gold for everybody else. Go and take those other courses. And thank you for attending this webinar. Look for the recording tomorrow. I'll see everybody soon. Bye-bye.
Bye.
Thanks, everybody.